Have you been looking to purchase an investment property and you really just don't know where to start? If so, watch this video because we're going to cover one of the most popular programs called a DSCR loan. You'll get a ton of value watching this video as we're going to cover one of the most popular programs that every single real estate investor needs to know about. We're going to break down everything about DSCR loans in this video so that way you can understand what they mean for real estate investors and how they can help you on your investment journey. First, let's start with the basics. DSCR stands for Debt Service Coverage Ratio. A DSCR loan is a type of loan that's used all the time in real estate investing, where the lender primarily focuses on the property's income generating potential to determine the eligibility, rather than relying on your personal income or tax returns. In other words, a DSCR loan really just focuses on the income potential from the property, rather than evaluating your income and what you make. Now, this makes it far easier to qualify for the property because all we care about is the cash flow, not your financial situation. So to understand how a DSCR loan works, let's break down the DSCR formula. DSCR is calculated by dividing the property's net operating income, known as your NOI, by your debt service, which is the total amount you owe in loan payments, typically monthly. So here's an example. Let's assume that your property generates $5,000 per month in rental income, and your total mortgage payment, including taxes and insurance, comes out to $3,500 per month. Your debt service coverage ratio would be calculated as $5,000 divided by $3,500, which gets you a debt service coverage ratio of 1.43. This would look really, really good to the bank. So what does that number mean? A DSCR of 1.0 or more means that the income from the property is enough to cover the debt service. Now, anything below 1.0 means that the property is not generating enough income to cover your debt service or loan payments. So now let's talk about why the DSCR ratio is actually important. The higher the number is above 1.0, the more favorable your terms are going to be, meaning a lower interest rate and sometimes even allowing for a lower down payment. So who really uses DSCR loans? They're especially popular among every type of real estate investor who generally has multiple properties and they're really looking to expand their portfolio without having to rely on their taxes, pay stubs, etc. So for instance, if you're a seasoned real estate investor, obviously if we're looking at your tax returns, we're going to see all the different properties on your taxes. So with the certain write-offs, we obviously can't factor in all the income that you're generating from your property. Therefore, it can be incredibly essential to use this program so that way you don't have to show us your taxes and look at any of the other properties that you own. So let's go over the advantages of the DSCR loans. I know I'm really hammering this point home here, but we don't have to look at any of your personal income tax returns. So you do not need to submit taxes, pay stubs, W-2s, anything like that. Truly think that it is property centric, meaning that we're focusing purely on the income potential from your property to make sure that can cover your monthly mortgage payment. However, it's really important to note that DSCR loans are not without their challenges. They're typically a little bit more expensive than your traditional loan, as us as the lender is taking on more risk since we're not looking at any of the income that you provide on taxes. This can mean obviously higher interest rates and potentially more down payment required. However, it all depends on the property and what the cash flow looks like. So really, let's talk about what the ideal range is for you to be with that DSCR loan. Basically, you want to be anything above 1.0. However, 1.2 to 1.5 would be the absolute sweet spot for a DSCR ratio. Basically, it just means the best interest rate and potentially the lowest amount down for the down payment. However, if your DSCR is lower than the required threshold, you could potentially still qualify. However, the loan terms wouldn't be as favorable, and you might even have to come up with a larger down payment. However, on the other hand, a higher DSCR could result in better rates and larger loan amount. Now, next is going to be what type of properties qualify for a DSCR loan. You can use DSCR loans on everything, meaning townhomes, condos, single family, and even if you want to look at starting to purchase multifamily homes, we absolutely can utilize this program as well. So how can you prove your DSCR if it's lower than what you would like? First would be increasing your rent. That would definitely be the easiest way to boost your NOI and end up improving your DSCR ratio. Next would be cutting expenses on the property. So that way it's either getting a better homeowner's insurance policy, and of course, us looking to do a refinance to lower your interest rate on the current loan. The next way to improve would be if you were able to cut some costs on the property. Therefore, you'd be able to increase the bottom line on the property's cash flow. Some examples would be cutting the homeowner's insurance. If you can find a better policy with the same coverage, that is obviously going to be cheaper every single month. And then lastly, if you already own the investment property and you're utilizing a DSCR loan, there's a great chance that the interest rates might be lower than when you purchased the property. So that's where we'd be able to look, see if we could lower the interest rate, therefore lowering your monthly payment and increasing your DSCR ratio. So really just recap all of this. The DSCR loan is absolutely fantastic if you're either a first-time investor or a seasoned investor and you don't want to provide any of your taxes and really just utilize the property as a cash flow in order to qualify for the loan. I truly hope this video gave you some confidence and insight as to what DSCR loans are, how you can use them in your own portfolio. But of course, if you ever need help or have questions about this, my contact information will be below. Look forward to talking with you soon, and take care.